As the broader markets bleed, some of our favorite assets will be facing some pressure to the downside. If that's the case, I would not look at this like failure, rather an opportunity, as these discounts may come to a bitter end in the coming weeks. Welcome back to the channel on this Thursday. This is ARCa, and let's dive into ticker symbol VIRI. Let's kill 'em, team. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and pull up the charts here for ticker symbol VIRI. So I'm sorry, guys. That's actually my little guy over there just throwing things around, right? So he's, I think I don't know what he's throwing around, right? But let's go ahead and take a look at this. So what I'm going to do here is actually pull up a fresh chart, right? So I can see a new light, right? So potentially to kind of just give it a completely clean bias. I don't want to use anything that I've had drawn before, only if it calls for it, right? So particularly for the statistical back tests and all that stuff, right? But for now, yeah, I want to just go ahead and pull up a fresh chart and see what we have in store for this asset, right? So first of all, let's go ahead and look at this on the 3-day chart. And the moving average that you see here is the exponential moving average 7 period. As you can see, we've actually failed it. We've actually come down beneath that SMA, the EMA 7, right? And we are now using it as a per se a guide towards that downside, right? So I guess the trick here is to try to find out where that downside is going to end, right? So let's go ahead and start speculating this, because if I'm going to be honest here, this is a 3-day dead cat bounce, right? So I think that this is setting up a bull trap. I'm sorry, a bear trap. Sorry, I think that this is setting up a bear trap, and I will tell you why. Okay, so first of all, let's go ahead and put the downside thesis first, right? So let's put it down. So this is what it would be looking like, right? So this is the support bottom here from the dead cat, right? So this would be the dead cat bounce here all the way up here. So we take a trend line from that top side of the candle all the way to that bottom support line, and then we add this trend line to the area of breakout, right? In this case, of course, we would be facing the breakdown actually from this point here, and you can see that the candle's already failing or succeeding that support for a short play, right? So the target here to be faced would essentially be around 46.12, which is actually, let me see, I'm going to highlight it here instead. 46.29, right, which is actually in line with the top sides of these candles over here. This is actually a top side of 48, and this would be a little higher, right? 48.44. So these are kind of rhyming within that bottom side target. So from here, of course, we can go ahead and just draw this in, right? So although I don't believe that the price action may actually go to this level here, I actually do think that there could be a play here that would actually trap the shorts, right? So now that wouldn't mean that we're going to succeed the downside here. So first of all, we have to observe every tool that we have to our disposal, right? So, I mean, if we can, right? So sometimes, you know, the best, yeah, of course, you'll always hear this, right? You'll always hear that the best indicator for you to use is actually your price action, right? This is your leading indicator. This is the closest thing that you're going to get to a read of a forecast or any type of potential future target or whatever that is, right? So some traders do not believe in forecasting the future. Some traders believe in just trading based on reactionary things, right? So they react to certain breakdowns, breakouts, certain touches of moving averages, geometric levels, that whole deal, right? So in this case, let's go ahead and pull up the Gaussian bands, right? So let's do that now. Okay, so yeah, this is essentially what I'm speaking of here, right? So there is a range of support here, but I got to say that this bottom side of 73.02 is very much the opening of this red candle here. So that was a 73, yeah. So that's a 73 bottom here, and the Gaussian bands are located right at that 73.02. Okay, so that's where I'm saying that there could be a bear trap in line. Now, That is also not to say that this can't be just a short-term bounce, since we actually are succeeding the downside or the bottom side of the support, right? So sometimes, yeah, we would be at risk here of facing a downside touch right to that 73.02 before validating the resistance up here at 79.84, which, by the way, by the time that happens, we would have the SMA 7 located right around there for resistance, and then this would actually capitulate for a downside play, right? But I just want to point out here that we have broken into this channel here, and we never actually came back to validate the support of it, right? So this may very well be that touch, right? So please remember that I am speaking of the 3-day time frame here, and this has 17 hours and 14 minutes to close. So meaning that if we are able to close this candle inside of the 3-day Gaussian band, then that would be an okay thing to observe, right? Particularly because we have not failed that support just yet. So first of all, yes, we have to already assume that we're going to face a continuation to the downside here to get that 73.02 validation, and hopefully, yeah, we can get a bounce to the upside here and then just get this candle to close within the inside of the Gaussian bands, right, team? So let's go ahead and now move on to the next topic. So let's kind of bring in here the shorter time frame, as we do have a few other things to talk about. So let me see the daily time frame. Let's see what we have here. So remember that I'm actually looking at this as I guess as a new pair of eyes, right? You can take it like that. Okay, so actually let me see if I can catch it on the 3-day, maybe even on the 4-hour. I'm starting to see something here, and that could be a very clean regression here. So let me get the Gaussian bands out of the way now and make some drawings here, right? So let's see. Yeah, I think I see it. Falling wedge appears here, right? So something along the lines of this regression here, just like that, right? So what we're going to do here is actually just put together another regression. That's my wife coming in. My little guy's excited. Right? So we're going to put together a regression here from this point. And yeah, I think that, oh my goodness, if not the floor, then this could actually be the floor here. Yeah, the little guy's excited to see mom. That's cute. All right, so let's go ahead and take a look at this like this. All right. Yeah, so remember that I'm observing this here on the 8-hour time frame. It could very well be the 8-hour as well, right? So I guess in this case, sure, let's just go ahead and entertain that possibility, right? So, and then also this, we can tighten it up ever so slightly here, right, to make sure that we can favor the resistance touches there. And I do have to say that this has me a little confused here. So it may actually be this one here, which would then make actually a pretty good amount of sense. Okay, yeah, let's go ahead and picture this, right? I'm going to get rid of the dead cat target here and adjust this because my OCD levels are going off the Richter, right? Here we go. Okay, so yeah, this has the potential of being a falling wedge, which is a bullish formation, and a reversal pattern, right? So if that's the case, then we would be prepping for a potential breakout soon. And I'm saying this because we're already at the we already acquired the apex of the triangle. So these formations tend to break out. They tend to break out typically at about 75% or 70 to 75% to the apex of the triangle, right? So typically 65 to 75, right around there. And I have been noticing that these formations have recently been failing, and then they actually rip to the upside, one being an ascending triangle in FNGR and a few others that we've been observing, right? But yeah, this is following that type of behavior. So if we are implying that this is going to fail, followed by a recovery, so that could be the bear trap, right? Alongside with what we're talking about. So yeah, so I can definitely see that we have a support coming up. I understand that this would be that huge drop here based on a 3-day time frame, right? So let's just let me see that. Yeah, that would be the take profit here for that dead cat bounce. But let me go back to the 8 hour here and see if we have anything of relevance, right? So yeah, if there's gonna be I guess that you know what? Since we have a little more grain here, I can be a little more precise, right? So 73.54, 73.81. Yeah, let me see 73.81. Let me see if I have anything back there. I don't have anything. Okay, so let's draw it in. Let's draw in the range. 73.81. High probability there too. And now the bottom side that we would be observing here, I want to make sure that I can catch it. That could be 70.21. So 73.94 to 70.21 looks to be that bottom side support, right? And it could be the bear trap. Of course, we're going to have to observe price action on the broader markets. And now, why am I saying that, right? So if we can just go ahead and pull up the stacks here, I don't have much drawn in, right? So we can just go ahead and do this and block the visibility from this and bring this back. And now, you know what? We can go back into the daily time frame and now pair this with the SPY. Okay, so let's see what the broader markets are doing against it. What do you know? Look at that. There's a direct correlation happening between the SPY and VIRI. So this is why I'm saying, team, if we are going to be facing some type of continuation to the way down, that would be introduced by the broader markets, right? So the SPY is definitely showing some pressure to the downside as we had the jolt surprise, right? It was a jobs read. But I hardly think that's going to introduce a rate hike. I honestly think that the Fed may actually pause. So, which means that if they do pause and we come into November with that fact actually fulfilling itself, then the markets will rally to the upside. Now, but that's literally talking about a month away, right? So in this case, we're speaking of the immediate short term for VIRI. But yeah, it's just, team, I would really watch out for this. This has nothing to do with the stock being, it has nothing to do with the stock itself. This has everything to do with the broader markets, as you can see here. It's just a direct correlation, right? So even if we did something like this, and bring this down to something like that too, and kind of extend this throughout its history, then yeah, I mean, you can see that, right? Huge downside starting from down here, right? On VIRI, we have, this is VIRI here, right? So we have a huge downside there, right? Which is very interesting because this is the failure of the vaccine or whatever it was that they were doing for the trials. And that was also when the SPY was capitulating, right? So September 2022 right there. So, and then from there, you can clearly see that actual relationship between the SPY and VIRI, right? So it's very, I mean, it's clear as day, right? So in other words, we need to make sure that we can keep track of the broader markets when trading or investing in the VIRI. Okay, team. So yeah, that was another thing that I wanted to show you here. So now let's go ahead and just touch down on the last part of the analysis here. Let's start off with the 30-minute immediate short-term time frame, and I guess just for accuracy, let's just keep in our drawings, right? Okay, and now let me get rid of this, and now let's observe volatility versus momentum, starting from the immediate short term, right? So, okay, well, very, very interesting and very convincing upside pivot here on the stochastic momentum 30-minute immediate short term. Wonder why that could be. Let's see, the 15-minute time frame has an upside pivot too. Yeah, 10-minute upside pivot and 15-minute upside pivot. Curious, very curious. Okay, 30-minute MACD is actually starting to make its bullish crossover here. We're getting some green bars on the histogram. Looking pretty powerful, right? So, oh, and here's another detail. Check this out. If you're still here, congratulations. You're about to take a look at a pretty neat little fact here. Yep. Oh my goodness. It. You know what? I can't get the volume to appear. It's okay, right? So this candle here, right? So this bar belongs to this candle. Notice what volume is doing. On a 3-day, volume is actually collapsing. And that is a clear signal that we're in a triangle. And that is a clear signal that there could be a loss of bear strength here. So yeah, this is potentially reaching a bottom. And yeah, I think there could be a bear trap in line. All right, so now let's go to the hourly time frame and bi-hourly. So the hourly time frame actually starting to show a little curvature here from the stochastic momentum. We're expanding in volatility too, decreasing bear pressure on the MACD. By doing that, right, we may have a bullish crossover. Oh, almost there. Almost there. So let's look at the 3-hour time frame now. 3-hour time frame is still showing some downside. So yeah, I assume that the immediate short-term time frames, at least from 5 minutes to now, the bi-hourly are reading a potential upside and correction coming up. Right, so we do have a little bit. Oh no, that's good. The RSI signal here, right, versus the SMA 14. This looks like we have a good shot of succeeding the upside of the SMA 14 instead of using it as resistance for a downside. And the reason why I say that is because the RSI is actually entering the gravitational zone of the bear strength percentile. So entering this gravitational zone would actually push price to the upside. So yeah, we're going to have to observe here the immediate short-term time frames, but I think that this is I think that this is actually a bullish setup and not a bearish one. All right, team. So I am liking what I'm looking at here. So please just kind of bear that in mind, right? So yeah, I think this is a pretty good place to leave off. If you have any questions or concerns, you know where to reach me, right? If we do get that bounce from this area here, 70.21 to 70.94 or 73.94, sorry, I could see resistance coming up to the area of 79.81. We would have to combat that and close at least a 4-hour or bi-hourly candle above that 74.81 in order for us to continue onwards and upwards, right? Actually, it would be 79.56. Yeah, closing upside of 79.56 with a bi-hourly or ideally a 4-hour, right? And then, yeah, this would actually continue to the upside to touch the 89.91 level. All right, team. So, yeah, please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, never, ever, forever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good night, and I will catch you at the bell mañana. Adios, team. Yeah.